From biotech breakouts to gold hitting record highs, this week had everything. The US government's still in shutdown, the Fed's flying blind, and investors are piling into safe havens. But before we talk macro, let's start with the biggest stock events that moved markets. First up, TSHA gene therapies exploded 53% in a single day after the FDA granted breakthrough therapy designation for its Rett syndrome treatment, TSHA 102. This move fast-tracks development and review, signaling strong confidence in TSHA's platform. Investors took notice, sending the stock soaring, one of the biggest biotech moves of the quarter. Next, FICO jumped 21% after announcing it'll start selling credit scores directly to mortgage resellers, cutting out middlemen like Equifax and TransUnion. This gives lenders cheaper, faster access to scores and gives FICO new recurring revenue streams. Analysts called it a power shift in consumer credit data, while competitors tumbled more than 8%. And in the clean energy space, Lithium Americas caught fire after the US government took an equity stake in its Thacker Pass lithium mine as part of a $2.26 billion Department of Energy loan. That's the largest planned lithium project in the Western Hemisphere, enough to power roughly 800,000 EVs a year. With GM already owning 38% of Phase 1, this new federal investment signals that the U.S. wants a long-term hand in domestic lithium production. These are exactly the kinds of events Levelfield's AI tracks in real time, scanning 6,300 companies daily to detect catalysts like FDA approvals, government contracts, and policy shifts before they move the market. Now, from company headlines to macro headlines. As the U.S. government shutdown dragged into the weekend, the economic picture got blurry. Key agencies went dark, halting reports on jobs, inflation, and GDP. That blackout means the Federal Reserve is effectively flying blind without data to confirm whether the economy is actually slowing or just cooling temporarily. Private indicators filled some of the gap, but not with much good news. The ADP payroll report showed weaker hiring, and the ISM Services Index barely held above contraction territory. With no official numbers to guide them, investors are left guessing when or if the Fed will move forward with rate cuts. Meanwhile, safe havens are back in demand. Gold surged to $3,875 an ounce, extending its 7-week rally and bringing its year-to-date gain to nearly 50%, its best run since 1979. Natural gas rose 3.7% for the week, platinum climbed 2.97% in a day, and copper remains up 26% this year, showing that investors are clearly hedging against uncertainty. Overseas, there was one bright spot: real diplomatic progress in the Middle East. The U.S. rolled out a 20-point Gaza ceasefire plan, earning rare global praise. Hamas agreed in principle to release hostages, Israel began limited troop withdrawals from Gaza City, and both the EU and several Arab nations backed the framework. It's the first tangible step toward peace in over 2 years and could ease some of the geopolitical risk that's been keeping energy prices elevated. But back at home, Wall Street wrapped the week with muted results. The S&P 500 barely moved, the Dow slipped 0.2%, and the Nasdaq closed slightly lower. Healthcare led the pack with a nearly 7% gain, followed by utilities and industrials, while energy stocks tumbled more than 3% as oil prices cooled. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Levelfields newsletter. It's fast, free, and built for investors who don't want to miss a beat. Follow and subscribe for more. Levelfields Elite Investing, Effortless AI.